Good morning. It's Tuesday, February 11th, about 5:30 a.m. Central Time. I'm Philip Streible, Chief Market Strategist with Blue Line Futures. Let's get you ready for the futures and commodity trading day ahead. Poured my coffee. Coffee's up about 33% year to date. So what I'm saying here is that commodities, they are the place to be right now. The Bloomberg Spot Commodity Index is at its highest level since December of 2022, rallying about 7% year to date. Now, looking at the precious metals overnight, they are painting a little bit of a different picture. We've got right across the screen here, they are the worst performing commodities overnight. You got palladium down 2.5%, silver down about 1%, platinum down about 0.5% right now. So the overnight trading ranges, gold did make a new all-time high. It actually opened up, it closed the previous session, gapped higher, rallied to an all-time high, and then sold off, and we're kind of on the low of the session right now. So you look at the lows, it's 29.2770. We're trading near that level right now, 29.3120. So it's where the market had gapped up on the charts here. So you take it to the charts, and mind you, it is the start of the trading session. You look at the precious metals complex, there are a few things that stand out. So you do have copper futures down about 2.5%. Big sell-off there, down about 11-12 cents, trading at 458. Now back to what I was saying with the technical pattern. You guys should all do this. You should be able to look at markets from a technical standpoint, then also your fundamental standpoint. I get a lot of people that call me up and they kind of regurgitate what they're reading in the news headlines, what they're reading on a lot of different conspiracy websites and things like that, kind of getting really into the weeds here as far as a lot of these markets are concerned. What I'd like to hear more is, hey, check out that chart pattern right there. That really looks like we're setting up a nice case for something turning, things like that. One thing that I do have a lot of clients, they call up and they'll ask and they'll say, hey, what are 3 charts that stand out to you? I can tell you one of them right now that we've been monitoring: crude oil for a reversal, cotton for forming a multi-year bottom. Those are just a few things that stand out on the charts here. So looking at this chart pattern though on that gold market, this right here is called an inverted hammer. It's a candlestick pattern that tends to happen near the top of an uptrend and may indicate a potential reversal for a downtrend. Now, I'm not just saying that gold futures are going to go into a downtrend or anything like that. I'm just saying that when I look at the market, that's one of the first things that I'll see. I'll click up the chart, I'll look at the price action, and I'll go, hey, that's an inverted hammer pattern right there. So it's a candlestick pattern with a small body and a long upper wick. The upper wick is at least double the size of the body. The buyers had pushed those prices up higher, but the sellers had come in and they pushed them back down. The prices got to close. This is where it's important because it's so early in the session. We're nowhere even close to the close. It's got to close near the lowest point of the day. So that's where the market had reached the top and is likely to go reverse and start some kind of downtrend. So you need to see market close near the low of the day, and then you need to see the market close and go lower here tomorrow. So I know you guys don't want to hear that because it's the metals markets and a lot of you guys are emotionally tied to the metals, but I'm just saying if you look at things objectively, that's what you could see on these different patterns here. So that's just something that I'm going to be watching. You always want to have a few things that you're kind of watching in the background, you're checking in on. You don't want to just check on where your position's at, what the price is at. You want to see the news and how things unfold throughout the day. So pushing on to the silver contract, it is down about 1% right now. The high was 32.66. The low was 32.02 and a half. So what's that mean? Those levels that I've been flagging, 32.25, we've been kind of finding some complacency at that area. 32.03 was the Monday night lows. 31.88 is an area that I was looking at for support. And then 31.61, that's kind of that early 2025 resistance, those highs, and then it's also now kind of those new lows, especially the February 3rd low. So today's action, you did see gold, it hit an all-time high in the overnight session. It's been a very volatile overnight session with Chinese insurance companies adding to their gold positions here. And then you got Trump triggering some safe haven demand after a flurry of tariffs here and a breakdown kind of in the Middle East ceasefire agreement. That's why I got that crude oil contract on my radar here and new threats going on in the Middle East. So let's take a look at crude oil before getting back to the metals. You got crude oil futures stringing together about a 3-day rally here, up about 78 cents. That's greater than 1%. That chart pattern here, we got down to about $70 and we're bouncing and we're moving higher. Now I know what a lot of people are going to say, drill baby drill, but remember, that's just one thing. That's just one ingredient in the price action here. It's going to take a long time before you get that oil up and pumping into the markets here. We're still at the phase where Trump is trying to sort things out in the direction he wants to go. Is he going to make this hard stance with Iran? Is the Middle East ceasefire agreement with Israel and Hamas going to break down? Will he be able to get that oil up and running here? Is he going to stock the SPR first? How will the tariffs impact it? There are just so many different things that are so many different variables here that I think that we're just so early in the stages of Trump 2.0. So we saw gold futures, they did surge to that fresh peak, that record high here before paring back a little bit of those gains here. And the discussion is that it's really this global trade war that's going on right now, and things are heating up a bit. So gold's up about 11% year to date. We have had some successive records on the gold market here. So generally, it's very difficult to pick a top. When you got markets that are making new all-time highs, cruising on this 45-degree angle, you know, you want to be the genius. You want to pick the bottom. You want to pick the top. Now, if you're going to pick a top on a market, what do I tell people to do? Because I see a lot of people doing this on coffee. I see them doing that on various commodities, is you implement a plan and you trade your plan. So what's your plan? Your plan's either going to be a defined percentage risk of your account, a defined dollar amount risk in your account, a technical resistance level in your account. But the most important point is that you have a plan, you trade your plan, and you don't become an ostrich with your head in the sand. Didn't mean to make that rhyme there. So if you look at that gold market here, many of the people are forecasting $3,000 an ounce. I believe that as well. We are in striking distance of $3,000 an ounce. What I'll probably be doing is working some offsetting orders for some clients up at that level near that $3,000 amount, so they can tell everybody that they sold the top at $3,000, and then what'll end up happening will probably blow through and go a lot higher. But anyways, let's shift focus here to the equity markets. President Donald Trump, he had signed a 25% tariff on steel and aluminum imports, affecting all U.S. imports, including those from Canada and Mexico. That's where markets got a little bit rattled here today. So that's to protect the domestic production and to bring those jobs to the U.S. So he's looking at this for the long haul. He's looking at a strong labor growth. He's looking at building some new jobs, and he's looking at building the domestic production. Now, the tariffs are going to take effect on March 12th, and they'll include finished metal products here, and that may lead to higher costs for U.S. consumers with a potential retaliation from these trading partners. So it's really just a sour note in a lot of these markets, and I think that's where we're seeing some of this breakdown here. He's including even the European Union, and that's why you got your sell-off. Now, again, shifting to crude oil, I said that there are some signs here that the U.S. sanctions are going to impact that Russian crude oil supplies. So you got Brent crude oil moving on up to about $76 a barrel. And also President Trump said that Israel should call off its ceasefire agreement here with Hamas if the hostages are not returned this weekend, risking another escalation in those hostilities, and that both have accused each other of violating the terms of the deal. So those are a few different things on the radar. You got the metals, you got the equities, you got the crude oil futures here. Now, what the other thing that I'm going to watch here is going to be Chairman Jerome Powell. He's going to give his semi-annual testimony to Congress. So what I'll do is I'll look at the CME's Fed Watch tool. Don't necessarily look at the March or the May meeting. Click on June, and what you'll see here is there's about a 50-50 shot that the Fed cuts rates here in June. So what we want to see is, how are Fed officials going to respond? Is it going to have an effect on these interest rates? And then is this slow go kind of rate cut message that Powell's going to bring, is it going to weigh in on the metals, especially if Fed officials, they just want to continue to monitor how these tariffs play out on inflation, employment, and those are the two different things that determine their mandates. So if you never traded futures or commodities before and you watch this video every day, on the gold market, they did announce a new 1-ounce gold futures contract. I know it sounds very small, but it offers this pocket-sized approach that allows you to transition from the 1-ounce contract to the 10-ounce contract. If this is just a pullback in the metals markets and we're going to go on to 3,000, 3,300, 4,000, 5,000, it could be a great starting point for people with very, very small limited risk. So it's something here to keep into consideration. Now, if you got any questions on futures commodity trading, there is going to be a link in the description how to trade that 1 ounce gold contract and how to get some additional information on it. If you got any questions, futures option trading, give me a call, 312-858-7303. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.